on, Jim? How are you?
Oh, I'm doing fine. I must admit the conditions are surreal. We're in the middle of the ninth inning here, and one of my little indicators of weirdness is I lose track of what day it is. Yesterday I thought it was Saturday. I'm not losing my mind. I'm just getting shell-shocked with financial market and economic trauma.
Mm-hmm.
So we're in strange times. This is very late in the game now. The dollar is in the process of dying.
We were on a Skype call just chatting about a week ago on the weekend after there was a explosion at a chemical plant in Texas, and you sent out an email saying that was something you were not surprised. You had spoken of maybe an attack that might take place in Texas against an oil refinery or something of that nature. Anyway, in the conversation, you mentioned the words "we're at war." And those stuck with me. Those words, that phrase stuck with me. So on to our first topic. Has the financial war and the trade war now turned into a hot war?
I believe definitely yes. And now that we're in these modern times, we've got a much bigger civilian population. So rather than a global war like World War II, where nations are overrun in their borders, what we have now are strategic targets being hit. If you look at some of the deeds that China has been accused of regarding the U.S., it's not overrunning California and with stormtroopers. It's a disabled New York northeastern seaboard airline lockdown from computer failures. It's getting very interesting. And take a look at the big explosion a little over a week ago in Tianjin. That's going to be a household name. I never even knew about the city, Tianjin, okay? Or Tianjin, I don't know how they pronounce it, but it's probably the most strategic center in all of China, more than Shanghai ports. There was a huge explosion there, or a series of explosions. It looks like kind of a small nuclear bomb wasteland. And that's what the rumors are. We're going to slowly hear more evidence, but I think it was the site of a micro nuke. Mm-hmm. Now, what's so important about Tianjin? Well, it's got a gigantic port with something like 20 port facilities, kind of like, Long Beach, California. Long Beach has several port sites within the larger facility. Mm-hmm. Tianjin has about 21, I heard. Wow. Well, they also have a gigantic car facility that pumps out Volkswagens of various types of models, but it also has some chemical depots. And nearby, I think it's only 2 kilometers away, is their most important information center supercomputer that ties in with their banking system, technology firms, military, and their space projects. So it's kind of, very clear in my book. All right, if the U.S. wanted to retaliate, that would be the best place to do it. I don't know exactly how they did it. I suspect that there were some, electronic devices that were remotely triggered. Maybe they entered with containers in their port. Maybe there were some devices that were located in a car parked next to a chemical tank. But, there are a lot of rumors of a laser satellite application. Mm-hmm. And we're not talking about an accident here.
Right.
We're talking about an attack. And I think we're going to find Langley fingerprints exposed. It seems like the Al Qaeda asset has a new Chinese wing. It's called the Uyghurs, 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 and they've got an office in Washington, and they had some connections even with the Bangkok explosion. Apparently, there were some exile dismissals out of Thailand of some of their people from the Uyghurs. And just a few days later, there's an explosion, the largest in the history of Bangkok. So, we're getting to a very dangerous stage where, following the Chinese RMB devaluation, which should be looked at as a cut, a dislocation from the Chinese central bank from the U.S. government. They no longer have any tight connection that has existed for 15 years. Even after 2005, Will, there was it went from a tight link and peg, as they call it, to a looser one with a degree of variation permitted. They called it a ribbon.
This is
a range.
Jim, this is
so
the currency peg?
Yeah. So the Chinese yuan, the RMB versus the dollar, it was tight from 2000 to 2005, and it's been a little looser within a ribbon. They permitted movement over the course of days as long as it stayed within something like 1%. Well, now that's removed. And, people talk about this devaluation as, oh, what's a big deal? It's just 1.9%. Well, it is a big deal because people who say that are morons. You're removing the connection between the Chinese currency, the biggest industrial power in the world, with the United States, the biggest bond fraud center in the world. That's important. When you loosen that and remove that, what you're doing is you're inviting a currency war. We have a string of nations like India, Thailand, South Korea, Russia. They're all now scrambling around, devaluing their currencies. And when the Thai baht is devalued lower, the dollar is pushed higher. We're at the point now where the clowns and criminals running the U.S. government were boasting that the dollar's strong. Pretty soon they're going to say it's too strong.
Yep.
We don't want it this strong. It's going to wreck the economy. Mm-hmm. So there's a lot going on. This is really amazing. But the U.S. government and the Fed don't want the dollar to be given an accelerant booster rocket. Mm-hmm. What happens when you put a bunch of balloons together like helium and they rise? Well, after they get to a few thousand feet, they pop, because a few thousand feet, the differential between what's inside the balloon and what's outside the balloon is great. So the balloon expands without the outside pressure being high. The dollar's going to rise and then vanish like a balloon pops. They don't want more devaluations from other currencies. So we're into the realm of intrigue now with devaluing currencies. The dollar, they don't want the dollar any higher.
No, that's a great analogy. The way you just put that, as far as the Chinese currency depegging or removing its tightness or its relationship or its connectivity to the U.S. dollar, really what that spells to me in my mind is reality pulling away from illusion. The largest industrial powerhouse in the world is slowly coming to grips with reality. And by removing the connection even more so with the illusionary U.S. dollar, it's another one of these dichotomies, kind of like what we're seeing in the physical silver market with the COMEX price. But we'll get to that. We'll get to that later. Jim, I think this is serious. I mean, this goes right into what you didn't want to get into treasuries yet. You wanted to get into the markets and what's happening with the stock market. I mean, I know that it's, for those of us that have been following the behind the scenes activities for a long time, watching the market starting to nosedive and have incredible bouts of volatility. What was the other day? It had like, I don't know how many 4 and 5 and 600 point swings. You have to look at the intraday trading, not just what did the Dow close at, which is all that the main propaganda channels focus on. It's what the average American focuses on. Oh, well, it closed up 200 points today, or it closed down 500 points today. But when you look at the intraday activity, it's shocking. What's your interpretation of the stock market nosedives? Is this just the glue starting to come, unglued?
Yeah, it's the Wiley Coyote moment. Wiley Coyote realizes, I got 300 feet below me in the canyon. I can't help but think that there are two big things going on here that I think are at work. The first is, if they weaken, to begin with, who are the biggest buyers of the stock market but the Fed and Wall Street banks? Mm-hmm. These are extensions of the QE bond monetization that has turned into asset monetization, asset support. I mean, I'm surprised they haven't brought in municipal bonds into the picture yet. All right, so you've got this weakness in the Treasury bonds that's been apparent now for about 5 months. 4 months, 6 months, 8 months. You got the repo market gone weird, the reverse repos being abused for hidden QE. You've got the dollar swap facilities. You got negative interest rates. You got much lower bond liquidity, trading volume. The Treasury bond market is showing fractures. So how do you generate some demand for treasuries but weaken the stock market? So they opened it 1,000 points down. Who opened it 1,000 points down? How did they open it 1,000 points down? Those are the questions to ask, and they're often not asked by John Q. moron public.
Well,
the way you bring down 1,000 point opening is with S&P futures contracts. And who does them? Wall Street banks. So my guess is that Wall Street put on enormous S&P shorts and futures option shorts, opened it up 1,000 points down, raked in a bunch of profits, and by raking them in, you saw the big recovery intraday, which CNBC falsely reports as, oh gosh, I guess there was an overreaction, so now people are grabbing at the bargain prices. No, it's Wall Street covering their shorts after they arranged 1,000 point drop. So why did they do that? I think they did it to generate some public U.S. Treasury bond support. This is, some very ugly stuff, but I like looking at something a little differently. I like looking at, well, gee, isn't the U.S. economy stuck in a depression? I mean, come on. What's the stock market doing so high anyway?
Right.
Oh, then I hear the argument, well, gosh, with low interest rates, it's always a precursor to a big recovery. And the longer you've had the 0% interest rates, the bigger and more powerful the recovery is going to be. Oh, really? Well, I think you've got a gear slip, and the CapEx, business investment, capital expenditure, I think that's going on by American corporations in foreign countries. So you've got the gear slip, transmission pulled off, and there's no recovery in the U.S. economy. In fact, if you take a really accurate look at what the inflation rate is in the U.S. economy, you see 8%, 9%, maybe even 10%. So when the U.S. stat monkeys in Washington do their inflation deflator for the nominal economic statistics, they reduce the nominal by 2% or 2.5% when they should reduce it by 8%. Mm-hmm. So their lie is 6%. And they're claiming you got 2% GDP growth. Well, try -4. Every single fucking year. Sorry about that. But you're talking about a -4, -5 recession every single year. Mm-hmm. What's the stock market rising for when the economy is cratered? When the consumer spending is cratered? When the money velocity is cratered? When business loan volume from banks has cratered? When the freight index has cratered? When the container shipping index has cratered? What's the stock market so high for?
Yeah,
I think a 50 or 70% correction is about right. What do you think, Will?
Well, we kind of discussed this, but looking at valuations, looking at PE ratios, looking at just market fundamentals, utilizing a lot of the same barometers that you just mentioned, the stock market's overvalued by at least double. But the Dow, that pretty little number up there, is like it's like the only thing that John Q. Public pays attention to. I mean, if the Dow is green and the Dow is going up, then everything's fine. I mean, the patient could be dying. I mean, the heart could have been removed, but as long as he's still standing and wearing his Dow Jones T-shirt, everything's fine. Well,
there's also the mutual funds. I mean, I think a lot of John Q. Public does look at the mutual funds every month and how's my net worth doing with all the mutual fund packages that I've got. Then add on some bank CDs and gee, I'm doing okay. But what they don't factor in is maybe losses as the banks die, losses to their CD valuations. Now, this is not just a Wile E. Coyote movement. I think this is a situation where Janet Yellen is the American version of Robert Mugabe of Zimbabwe. And I've been saying this now for 3 or 4 months. Our monetary policy is Zimbabwe-like. We've got African monetary policy, which pumps up the stock. So sooner or later, there's going to be an avalanche pushing it back down. And I don't know if it's going to be joined or defended by Wall Street. And I don't really give a damn anymore. But you can't have these valuations for stocks. And on top of that, the valuations, I think, are exaggerated because they've got some phony profits.
Yeah, cooked books. Bunch of cooked books all across the board.
I started exposing 4 or 5 years ago, the credit default adjustment where corporate bonds were taking a positive addition into the earnings, offsetting losses, just because their bonds were selling lower on the yields. So let's take the profit from bonds that are 10 years old from issuance, and they were issued at 5%, and now they're trading at 2%. Let's take a profit on that in the account. There's all kinds of gimmicky crap going on in corporate quarterly earnings reports and their earnings. So that affects the valuations, which are already, even after the gimmicks, double of what they should be.
Right.
So this is I think we've got some arranged swoons and dives in the Wall Street community. I think they wanted to maybe test also. This is the big second point. Wall Street wanted to test to see, well, is there more money on the sideline that might come in if we lower it by 1,000? Will money that's been waiting patiently, will it enter the market? The answer is hell no. No, I think the stocks are going to be the first major casualty. And it's not like you're going to have to wait for it to happen because it's already begun happening. We've got enormous losses, like you could even call them catastrophic losses. There are some big monitors out there that are saying right now that you've got a reduction in valuation, in other words, stock losses. I love how they put these nice phrases, valuation reductions. Oh yeah, how about stock losses? It's over $1 trillion, like 1.3 trillion just in the energy sector.
Wow.
So the initial damage, I think, is in stocks, but it's coming in a follow-up manner to the massive cracks that are in the Treasury bonds. And don't expect the Treasury bonds to crash. Don't expect interest rates on the 10-year to go up like to 4% or 3.5%. No, expect QE to rapidly ramp up on its volume.
Right.
And I think that's what we're starting to see.
Well, that's that's a good segue, Jim, into the Holy Treasury subject. We got news. Zero Hedge posted a day or two ago. China dumped $100 billion, or is dumping $100 billion in treasuries per week. It's definitely heating up. You covered very well the the BLICs, the covert QE channels that came about, with the last tapering talk or whatever it was, and they just became the buyers of last resort. These Langley channels or these whatever Wall Street channels to just provide liquidity and to your point, you're not going to see the 10-year Treasury spike. You're going to see money come from Luxembourg or God knows where to fill all those orders to keep rates down.
Oh, absolutely. Why should the Fed permit rates to go up and the flagship global reserve currency sovereign bond suffer deep damage when they could just print some more money, ship it over to Belgium or Luxembourg or Ireland or the Caymans or Switzerland and have them buy them as a proxy buyer at their central banks? No, you're not going to see massive damage to the Treasury bond. You're going to see its elimination. So what we've got here is, I think the beginning now, they're starting to call it QE4. But when we had QE3, do you remember my phrase of QE to infinity?
Yeah.
Yeah. Well, this is not a mathematical correct term, but I don't really give a crap. I'm calling this QE to infinity squared. We're ramping up the volume.
Following with
What's that?
It's not real math, and you don't give a crap. We're following right in the footsteps of the people putting these statistics and numbers together.
Yeah, I'm abusing a mathematical phrase. I passed this comment hours ago to my own colleagues, and one of the colleagues he's the other PhD in our group. He's an engineering PhD. Electronic engineering, and he wrote back and said, Jim, that's a bad term. What you really mean is e to the QE power, exponential QE.
Yep.
And I said, yeah, but when you're in the courtroom, do you talk about eigenvalues or an ill-conditioned dispersion matrix? No, you talk about the details that a jury can understand. So I'm going to call this travesty, QE to infinity squared. And if I get some critical mail from engineers and mathematicians, I don't care. No, okay, take a look at the pace. China simultaneously devalued their RMB and dumped $100 billion in treasuries in a single week.
Ouch.
Okay. Then the next week they dumped another $100 billion in treasuries. Now, normally, if a nation and a central bank dumps, say, $5 or $7 billion, it has an effect on the bond yield. So, what's the effect of China dumping $200 billion, which is like 20 times more, 15 times more? What's the effect on the bond yield? Nothing.
Luxembourg came in and filled the orders, right?
Who did?
Luxembourg, or one of these proxies came in.
Oh, Luxembourg. Yeah. Some hidden agent came in and bought up the dumped Chinese treasuries. So don't expect an effect. I looked for the last couple of days, I've been looking at the 10-year yield. And we had a move down into the 1.9s, intraday down 1.9 flat. But it was back up to 2.17 a day later. Mm-hmm. Where's the damage? There's no damage. Why isn't the U.S. Treasury bond at 12%? Why isn't it at 13%? The fundamentals are worse than Greece. Mm-hmm. And we have war on a credit card. So, gosh, if you're going to do a debt rating agency analysis of the fundamentals, namely how much new debt is issued by the U.S. government and how much interest is there out there to buy U.S. government debt securities, namely next to none, and add in, the debt rating agency asterisk, they're at war with almost every nation in the world. I'm sorry, only maybe 6 or 8. Well, that's costly. Add in maybe a little double asterisk that the U.S. is maintaining 150 or 170 military bases around the world. Doesn't that affect the debt rating? Wouldn't that take the Treasury bond to 12 and 15%? No, there's no effect. In other words, you're seeing QE to infinity squared. Okay. There's a lot of focus on China. There's always a lot of focus on China. Okay, fine. They have $1 trillion in debt. What was that, a couple months ago? Well, now maybe it's in the 700s. Mm-hmm. Okay, maybe in another couple months it would be next to nothing. I don't know. The important thing is not so much that the Chinese are dumping, but are they attracting the dumping exercises in a lot of other countries and regions in the world? I like to point out always the Gulf Emirates with Saudi, UAE, and the other nations in the Persian Gulf. How much money do they have tied up in treasuries? I've said this before in interviews. Add up the major Gulf region sovereign wealth funds, and you get $2.3 trillion. Mm-hmm. Half of that is with UAE alone. The Voice has some contacts directly in UAE, in Dubai, and he informed me a year ago they're pissing in their pants because they can't get rid of the treasuries that fast that they've accumulated in 40 years. Mm-hmm. So if you accumulate sorry, I'm losing my voice already. If you accumulate treasury bonds over a 40-year period, you might need 6 or 10 to get rid of them all.
Sure.
So now the UAE sovereign bond managers, sovereign wealth fund managers, and I hear there are about 20 of them, I hear they're all pissing in their pants. Maybe they're trying to deal with the problem now of owning like 1.7 trillion in U.S. treasuries. I've had some off-the-mark comments from a couple of followers in my Contact Us who've said, Jim, I think you're underestimating how much U.S. bank sector stocks the Arabs own. Look at Prince Al-Walid. And I reply to them, maybe they own a few more billion than I think. But if you add them all up, I don't think you even get 0.5% of 2.2 trillion.
Well, and correct me if I'm wrong, Jim, but bank stocks are a lot easier to liquidate, at least on a larger scale, than treasuries. Maybe I'm totally off the mark there.
Oh, no, I think you're right, except that there's a new problem in the treasury bond market, and that is the volume is down 60% from what it was a year ago.
Wow. And
there's plenty of liquidity in the big bank stocks like Al-Walid. I call him Prince Dickweed, pardon my French. But Prince Dickweed, he can dump his bank bonds kind of easily. And I think he has been doing that. The lesson to take from this is that the QE has ruined the integrity of the treasury bonds. And when you ruin integrity of a big structure, what you do is you force cracks. And we have the cracks with negative rates, damage to the repos, abuse of reverse repo, which just hides QE volume. Will, I put this in the August hat trick letter. There's $40 billion a day of failures to deliver of Treasury bonds.
Wow.
40 billion a day is $1 trillion a month.
Wow.
Is that hidden QE, by the way?
Yeah, so Jim,
Now,
let's just elaborate that on for a moment, if you would, please. When you have a failure to deliver in one day of $40 billion, what does that mean exactly? Failure to deliver meaning someone has to, there was a failure to purchase, so we're having a U.S. counterpart print the money and basically QE and liquidate and purchase that position?
No, I think you're focusing on legitimate purchasing, and you're missing the point of short sales.
Ah.
So a month ago, let's just say J.P. Morgan sold a bunch of Treasury bonds that they don't own.
Mm-hmm.
Naked shorting.
Mm-hmm.
And when you naked short, you must deliver on your collateral behind the short.
Mm-hmm.
They don't have it because they're naked short.
Right.
They're counterfeiting. It's a form of counterfeit. Wall Street banks and London banks, I believe right now, are taking in $40 billion a day.
Wow.
And not delivering on the security, which is what? Normally 3 days for stocks? What is it for bonds? 1? They're not delivering on what they sold, and I believe the Fed has a wink, wink, and a nod with the big Anglo-American banks, namely New York and London, where they can naked short all they want, and the Fed will provide them the cash on the naked sale, and they don't have to return the bond on a delivery, just like Barrick Gold didn't have to deliver the gold on the physical side in the 1990 decade with what they call the evergreen gold contracts. So we've got now evergreen turned into the Treasury bond complex with a hidden $1 trillion a month. I've been saying for the last several months, if you believe $40 billion a month is the Fed's QE volume, then you're off by a factor of 2. Even in the legitimate tables, bring in all the derivatives and you probably find a few $100 billion a month. Add in the abuse of reverse repo, add $1 trillion a month.
Wow.
So why are the Wall Street banks doing this criminal fraud, of course without any consequences? They don't go to jail, and they're not even being fined for this because they're not even being brought to the attention as a criminal deed for this. Why are they bringing up $1 trillion a month in free money from the Fed? I think it's to cover derivative failures.
So
Petrodollars being dismantled, Will, as we've been talking about.
And when those failures to delivery take place on a daily basis, what happens to the trade? It's just forgiven? It's just let go? Or
well,
as
yeah,
you said,
who cares?
the Fed is producing the cash.
Aren't these banks too big to fail and too big to prosecute,
Sure.
too big to jail?
Sure. Yeah.
They had the TARP fund fraud where they asked for $700 billion to make sure they had lending capital. All they did was they covered their preferred stock and some of their corporate bonds.
Mm-hmm.
The criminality is all over the place. I just have passed on an article to my brother, who I regard to be as an extraordinary knucklehead with a Phi Beta Kappa economics degree. I call him an extraordinary knucklehead. The article I passed on to him was $260 billion in fines and penalties from the Wall Street banks in the last few years.
Wow.
So I asked you, John, do you feel comfortable having your 6 figures in savings in 2 big Wall Street banks in Chicago, you extraordinary knucklehead. Don't worry, he'll never listen to this interview. He's too busy reading the New York Times. Mm-hmm. My big joke with him now to jag his ass is, well, you won't find that in the New York Times, but you are well informed about gay marriage. And by the way, our fearless leader had another slip before military leaders coming back from a trip addressing an Annapolis crowd where he said, well, we just got back from a long trip and Michael and I want to thank you for all the help you've done. I mean, people need to wake up. I mean, the White House residents are a gay couple. What part of this don't you understand, people?
Hey, we're supposed to be talking about treasuries here.
Oh yeah, sorry. Well, I'm sure Michael Obama finds a treasure trove in Obama's backside.
Oh boy.
All right, so there, I brought your connection to treasuries.
Thanks for that. Should we? I really want to get into the metals and just touch a little bit on what's been happening with metals. Is now a good time for that, or should we? Do you want to get into energy next? And
No, go straight. Go to metals. That's item 1. We're good. Go ahead.
Well, so this has been something incredibly telling. What's taken place in the physical metals market, mainly silver, in the last, since the early July mention of the suspension of sales by the U.S. Mint, the suspension of sales on Silver Eagles, which has happened. I mean, it probably happens every year. I've been in the metals business now for 5+ years, and there's, this type of thing happens. There's a supply side tightness. The U.S. Mint announces a suspension of sales. Premiums jump. Typically, it trickles into other products, 1 ounce rounds and 100-ounce bars and other such. And then it calms down after a couple weeks. Well, it didn't calm down this time. Now we're entering what seems to be the beginning stages of a market collapse. And if you go back and look at every single market collapse or financial collapse, everything sells off. Commodities sell off on the paper price we're talking about. So your COMEX spot price for gold and silver are selling off. They're still dropping. I don't know what they're doing this morning. But yesterday, silver kissed below $14 for the first time in 6 years. During the same day when you can't even get physical products. I mean, it's extremely tight right now in physical silver. Yesterday I was able to put together a deal with a few thousand ounces of 100-ounce bars, and I had to scrape together, and this was through major wholesalers. So as a person who deals in 5- and 6-figure metals transactions on a daily basis, what I've seen since in the last 6, 7, 8 weeks now has been unbelievable. Premiums have not come down. In fact, they've trickled into other products, and now all products on the silver side are delayed. Now, you can probably find a dealer who's got a monster box of Eagles he'll sell you or whatever that are on the shelf. But the point is, if you're dealing in 5- and 6-figure transactions in physical silver right now, you are very hard-pressed to get anything live. You're waiting 2 to 8 weeks. And what I'm starting to see already happen, Jim, in this retail side, and we're a larger retail, we're doing people's IRAs, and then they're rolling it over and taking the whole chunk as metals that they get delivered to their house. So we're not doing one and two coin, retail sales. But what we're already seeing happen is accounts that would have gone into silver are now going to go into gold. So by default, I think we're going to see, I don't know what the physical, especially on the supply side, on the larger numbers, you'll be more tuned in there on the gold side. But we're already seeing 5- and 6-figure purchasers that would have been going into silver say, nope, imagine you're a buyer, you're a metals buyer, and you have been for 5 years. You learn about this IRA LLC where you can take your entire retirement account, buy gold or silver with it, and put it under your mattress. You've got gold and silver at home. You'd like to put the $120,000 into all silver that's in your IRA, but at this point you can't get it and you don't want to wait 6 weeks. So you buy gold for delivery, tomorrow. That's starting to happen, and it's what we've seen has been unprecedented. I told my wife the other day, I think this is it in the physical silver market. What we are going to see, if we are truly entering a financial collapse, a market collapse right now, and we see spot gold and silver prices continue to trickle down, silver's going to dry up. The physical silver market, this is it. I don't know if orders that you're putting in the coming weeks and waiting 6 weeks are going to be filled. So
I agree. I didn't hear a question there, so I didn't answer.
Yeah, no,
I agree, Will.
Talk to me about the gold side. I know you're more tied in on the larger trades, on the physical gold side, especially international. Are you hearing similar rumblings? I mean, it's...
Well, I'm not necessarily tied into one particular side of the precious metals. I hear... I mean, my inbox is it's an international switchboard. It's amazing. When the voice communicates about conditions, he mentions things about very large gold sales, and he says that we're in the 20 to 35%, right in there, 20, 25, 30, 35% premium for very large gold purchases. Mm-hmm. You're talking about $300 and $400 premiums.
Yeah.
All right. And I've gotten, in the last few weeks, I've gotten maybe about 5 or 6 emails from clients about attendance at coin shows where there's nothing in the silver coins. Nothing. Nothing. So now you're starting to hear additional stories like a client passed this on to me only a few days ago. Oh, no, this is from SG report. He had a long list of stress factors involved in gold and silver, and this is one. The third largest U.S. wholesaler distributor of silver with 21 warehouses is all cleaned out. And people tell me, gosh, I don't want to invest in silver. It's just going down. And I said, yeah, it's going down, but not as fast as your IQ.
Well, it's
you don't look at the price and think you understand the market. I say to these morons, are you aware about things like price being determined by supply and demand equilibrium? And he goes, well, no, not really. I said, okay, why don't you just go over there and have another beer? No, you can't teach French to a dog.
Well, the problem, Jim, is that a lot of these people, if not all of them, they expect that the price discovery mechanism has these laws of economics built into it, or they expect that. So even investors like that have a little bit of a nut in their brain that have bought physical silver. People in my family, for example, Will, why is the price still so low? They expect that the price that they are told is true and real, and it maintains all these real economic laws. And it as you and I well know,
yeah, but they don't. These same people, Will, they don't buy your conspiracy talk about a suppressed market and naked shorting by the big banks and a colossal, short position by the big banks on the commitment of trader. They just gloss over when you talk about that, and they think you're nuts. Oh, conspiracy. Oh gosh, I don't know about that. Hey, honey, can we get going with the dinner? I get tired of these people. I don't have any time at all for them. I think they're going to wake up when they hear something like this as a headline news.
Yeah.
The U.S. Mint and the Royal Canadian Mint have announced they're shutting down indefinitely.
Mm-hmm. I don't even know if that would do it, Jim, to be honest.
Well, maybe not.
I don't think it would.
Maybe not.
No,
but
well,
here's another item from the stress side. Johnson Matthey and Engelhard are no offer on the 100-ounce silver bars.
Yeah.
I tell clients who ask me, should I buy more silver than gold? I've got some available money. Should I buy a bunch of precious metals? And I say, yeah, buy as much as you can, if you can find any.
Yeah.
So when you interrupt the dynamics of supply and demand, what you do with the price suppression is you eliminate supply, and you end up with shortages. And then you get the other morons coming out with their propaganda from the U.S. government and Wall Street saying there's just not enough gold. You can't have a gold standard to cover currency in the world because there's not enough gold out there, Jim. What are you talking about? You're just so impractical. And I say, how about if you multiply the gold price by 10 and you're at 12,000? You think there's enough now? Yeah. And by the way, are you aware, you stinking moron, that they've increased the money supply by almost that much since the turn of the millennium? Or were you asleep for the last 15 years? Oh, no, I don't really follow the things like the money supply. I said, you're probably not following the money velocity either, which is down over 40% since they started the QE stimulus. Yeah. So do you think it's stimulus, you moron? I mean, I'm really losing my patience with a lot of people, but that's okay. We're in the climax, and they're starting to wake up.
Yeah.
No, you're seeing premiums really shoot up. And are people aware that the U.S. Mint is not legally permitted to suspend operations?
Right.
They're not permitted to stop purchasing the silver that are required for stamping out silver coins, the silver eagles. They must supply, which means they're breaking the law and not bidding up silver.
Right.
Which would put them in an oppositional, confrontational position with respect to the Wall Street banks that control the U.S. government.
Right. Well,
now, we're seeing a lot of demand, Will, and it's exciting. The Germans now have 1/4 of the U.S. population, but they have twice the gold demand of the United States.
Wow.
That's an exciting little statistic. And not only that, but the East, which includes China, the East has twice the gold demand as all the West. And now you're seeing finally some effect from the Shanghai gold market. They're tapping 73, tons, 73,000, wait a minute, I'm sorry. Let me get my unit straight. Shanghai is tapping 73 tons of gold per week. Wow.
Wow.
They've been over 50 tons a week for quite a while.
These are imports.
I produced a chart. That's the gold demand to Shanghai.
Just the demand.
And
wow.
given that the country doesn't produce anywhere near that,
right,
they're importing.
Yeah.
Now, I don't know where they're importing from. For all I know, London has not been drained. For all I know, the Bank for International Settlements, the big Basel central bank of central banks, that's where all the Nazi gold was hidden. Mm-hmm. They're probably supplying Shanghai with some, so they don't have a default.
Right.
So there's a lot of hidden supply out there. It's just not showing up at the U.S. coin shows.
Well,
now, India even has a 61% increase in April and May for their gold demand versus last year's April and May. Mm-hmm. Now, we're seeing the dollar trinity die here, a horrible death. It's the Fed, Wall Street, and U.S. Treasury, Department of Treasury. This dollar trinity is, I think they're going to start killing each other before long.
Interesting. Cut off the nose to spite the face kind of thing, huh?
Well, it's a bunch of sharks in the pool, and they realize that that little shark over there is a little wounded and swimming slowly, so let's kill it and eat that shark. Oh, no, that was Lehman Brothers. Now, there's going to be another sacrificial lamb, and I don't know what it's going to be. I don't know that it's going to be I don't think it's going to be a single Wall Street bank. I think it's going to be an entire country's banks.
Interesting.
Like maybe they're going to attack all the French banks.
Interesting.
In order to save and buy time for London and New York. They're going to not kill a shark. They're going to kill a group of sharks in other waters. Mm-hmm. It's hard to know what's going to go on. What I try to do, and I believe it's been an advantage of mine for several years, I try to think like a criminal. Mm-hmm. And I tell you, I watched all the Godfather movies. I was a student of the crime sector. Mm-hmm. I looked to see how do criminals act. Well, they silence somebody who has too much information for potential evidence. They kill them. If one crime family has a member and they're just a little too friendly with another crime family, they kill them. And these are what I learned watching The Godfather. And this is how the U.S. government is starting to act. And even my brother noticed, he said 3 years ago, Jim, I realized the U.S. government's turning into basically a criminal organization. Mm-hmm. Yeah, but he stops there and doesn't follow it up.
Right. Yeah, when you acknowledge the fact that our government is involved in criminal activity, you then have to take it a step further and say, okay, well, what does our government control that affects my life and my world? Oh, it's everything. It's your U.S. dollar, it's your savings account, it's your energy, it's your oil, it's the air that you breathe, it's the food that you eat, it's the vaccines that you put into your children, it's everything. So until you start to really question...
And soon it'll be an RFID chip in your arm, because that movement's really doing well.
Yeah, they've already
We should really get to the energy sector losses here, Will.
Okay. All right, let's hit on that, and then I want to wrap up, because we were going to keep this short and sweet, and so far we're sweet, but let's hit on the energy sector. I know that's a huge one.
Sure.
So the losses are now starting to show face in the energy sector. I mean, I think they've been on the books now for a long time. Companies like Chesapeake operating, I don't even know how the hell they've been operating for the last 5 years. What are you seeing? What's starting to, it looks like some things are really starting to show face there.
We're starting to get some major monitors out there come forward and say, well, if you just look at the energy-based exchange-traded funds, and another group, I can't remember what that was, but two official top-line monitors, they're showing $1.3 trillion in energy sector losses. Okay, and now you've got Hercules, which is a driller. They're having massive losses, like 70% on their secured bonds, and a near total wipeout. I think 3 cents left on a dollar for their unsecured bonds. Wow. And they're entering now into bankruptcy. And one of the debt rating agencies, I think it was Moody's, but I can't remember exactly. One of the rating agencies called Hercules their signal. Their signal for the whole sector to go bust. You had one of the debt, Fitch. Fitch just announced that in the first half of 2015, 57% of the defaults were in energy, metals, and mining. Wow. Fitch mentioned that the bankruptcy rate is now double to triple the norm. And you're starting to see pretty significant losses in the private equity firms. Mm-hmm. They're making really excruciating decisions of putting more money into failed investments so they don't go bankrupt on, things like the debt service payments. They don't want to have covenant violations with the banks. Those are just guidelines regarding payback on loans. So these private equity firms are putting in more money, so putting in good money after bad.
Right.
And what they're doing is they're guaranteeing even larger losses later. So we're seeing here the dismantling of the petrodollar. And it's starting to show now with gigantic, catastrophic losses. You don't have trillion-dollar losses in a sector without affecting the whole system. I had an email just a couple of days ago from The Voice. And he wrote and said, Jim, I know half a dozen people who were multi-billionaires, and now they're struggling just to be called billionaires.
Wow.
In other words, they might have had $6 billion before, and now they're struggling to hold on to one. Mm-hmm. He said they're not going to miss a meal, but unless they do a good salvaging job, they're not going to be able to walk away with enough to continue in any kind of business ventures. So the foundation of the dollar is being removed. It was the oil sector. Yep. We abrogated in 1971 the Bretton Woods gold standard. 2 to 3 years later, we put on the petrodollar de facto standard for the dollar. It is being removed in earnest now. And I think we're going to see pretty soon the Saudis announce, well, you know, we're seeing a lot of legitimacy and liquidity, two important words, for the Chinese currency, so we're going to begin accepting RMB for oil shipments. And by the way, we've already been accepting RMB shipments for the last 3 months. I think you're going to hear that real soon from the Gulf region. Major oil producers. More losses have been seen from big managed pension funds like CalPERS. Mm-hmm. It seems like CalPERS is involved in every major bust. They had a lot of losses in the subprime mortgage bond sector. Now they're going to have some major losses in the energy marginal sector, namely the shale industry. It's not going to be just shale. And, you know, people have said to me, but Jim, isn't all this hedged? Aren't these major energy firms hedged? Well, yeah. So who's on the other side as a counterparty guarantor of an energy hedge? It's the Wall Street banks. So guess what's going to happen in the next few months? The Wall Street banks are going to die from the energy losses and the hedging that they've done as derivatives for the large energy firms and the investors for the marginal energy sector, namely fracking and shale.
Or Jim,
this is a death knell for Wall Street banks, Will.
To your point, Jim, maybe they conveniently offset all of those current holdings to some French banks or whatever, and they become the scapegoat. Is that possible?
No, I think what you're seeing in the last few years is a concentration of these derivatives with the Wall Street banks. Mm-hmm. It's all kinds of derivatives. It's Forex derivatives. But what is the foundation for all of the Forex derivatives but the energy derivatives? Because oil and the dollar have that grand foundation in the derivatives.
Right, right.
So we're seeing now the destruction of the U.S. foundation in Wall Street banks for the dollar. Mm-hmm. This is it. This is game over. The counterparty risk is going to become quite clear in the next several months. My best expert on COMEX and hedging related to shipments and positions is George of the COMEX. I'm actually mentioning him more often in recent months in the Hattrick Letter reports. And he just sent me a message a couple days ago. In the coming months, as the oil hedges expire, you're going to see an unleashing of the full brunt of damage and expect some Wall Street banks to face a death experience. Okay, as time passes and the oil price remains near 50, you're going to have expiration of the hedges and death experiences for the financial firms and the energy firms and the big investors who have the wherewithal to do hedging. They're going to die. And there's a very interesting phenomenon happening recently, and that is some big players have removed their energy hedges, and they're facing very sudden death because they removed their protection. They made a bet, Will, that the energy price is going to rebound in the second half of the year, like up to $80, and it's not. So they're going to die for a bad decision of taking a short-term profit, showing a quarterly profit, and removing the protection. They're going to be forced to sell, for instance, their oil output at way lower than their cost structure.
Gotcha.
And they're going to go bankrupt.
Interesting.
Wow.
Very interesting.
So did Wall Street banks maybe convince a couple of big players to take their hedges off? Wow.
Sure.
We're getting into very serious trillion-dollar intrigue now. I've thought for the longest time there are no billion-dollar accidents and coincidences. So when it comes to a trillion, which is 1,000 times bigger, these are all rather planned, or they're all part of the grand cycle that's unstoppable. And we're starting to see now, 44 years later, the death of the dollar. And I keep repeating it, and I got to say something, Will. Permit me to go on just a little bit here in closing remarks, but sure. The hate mails continue, and about half of them are on one particular theme. You're wrong about the dollar. The dollar's not crashing like you said it would. I didn't say that. I said it would rise, then vanish. The dollar's not going down. The dollar is not weak. It's stronger. You're dead wrong. You're leading your investors down the wrong path. You're an idiot. You're a shill. Blah, blah, blah. No, what's happening is the dollar is rising, and it's accelerating in its rise because of the Chinese RMB devaluation, which is joined by other nations. So the dollar's rise, you're going to hear very soon. The Treasury Secretary, who is it? I have trouble even remembering who it is because the figure's so insignificant. Oh, yeah, it's Jacob Lew, who doesn't have a recognizable, legible signature. Yes, that fits. The U.S. government signing off on the money with an illegible signature. No, you're going to hear the U.S. government, maybe with its little miniature mouthpiece in Jacob Lew, complain that the dollar rise has become a problem. And, I don't really care about hate mail. And thanks for the approximate 200 to 250 nice emails saying things like, don't listen to those idiots. They don't understand forecasts. They don't understand markets. They're probably working for Wall Street or Langley. They're a bunch of shills and trolls. Don't let them get you down, Jim. Appreciate your work. And those forecasts are correct that the morons, the trolls, are calling incorrect. I never said the dollar was going to crash. I said it was going to vanish, which is way over the heads of these Bush 80 IQ trolls sending me emails. They're like 3, 4, 6 a day. Now they get me a giggle. I read them and say, oh gosh, this guy is so stupid. He's so stupid. He can't even understand a forecast. I doubt he could even define what a forecast is. So most people are having trouble understanding the forecast of the dollar rising irreparably, uncontrollably, and then vanishing. How does it vanish? A new dollar is created for domestic purposes only, because as the RMB has more wide usage across the world as trade payment vehicle, they don't settle trade shipments in treasury bills anymore. They're going to do it with Chinese RMB currency. When this becomes more of a quasi-standard around the world, the foreign nations are going to tell the U.S., We don't want your treasury bills anymore for your payments on imports. And that's when the U.S. government has to come up with a new currency to guarantee import supply.
Mm-hmm.
That is how the dollar vanishes. A new dollar comes in and gets treated kind of like the Venezuelan bolivar.
Interesting.
With a sequence of devaluations.
Interesting, Jim. So therein lies the Scheist dollar. So that'll be a domestically used. So for folks that have the question, okay, I have this market-based annuity with a huge life insurance company that's been around since before the Great Depression, and for them to go out of business and not pay me my annuity income stream in retirement would be like the world burning. I mean, the whole place would be on fire. And I say, well, that just might happen. But nonetheless, do you think, is it your contention that those annuities will pay? It'll just be a vastly depreciated Scheist dollar.
I think they will continue to pay. I don't think they're going to adjust upward with the devaluation of the new dollar. I think they're going to remain in the new currency, and that's how maybe some of these pension funds have a little bit of a lift.
Right.
Their obligations are going to go down because the amount they have to pay out just got reduced.
Yep.
I wonder if there are going to be any hedges out there available of old dollar versus new dollar, so some of these big banks and financial firms can protect themselves from an instant death experience.
Wow, of course. Interesting. Well, when those instruments are available, let me know, because I'd certainly like to throw a couple $1,000 in the game.
I don't think that you have the right pedigree. You may not have the right ethnic background, and I don't think you have an office in South Manhattan. So I think you strike out on all three.
Very good. Very good.
But that's okay. That's okay. If you go down, they don't mind. No, there are going to be a lot of people who survive this, and they're going to be resented by those who get wiped out.
Mm-hmm.
Oh, gosh, I mean, you bet against the dollar and you won, but, you ain't no patriot. You're no friend of mine. And I'll say to them, I don't care. Why don't you go to that corner and continue begging for your lunch?
You can support a flag or an ideal all you want, my friend, but when that ideal is co-opted and is corrupted and is stolen by criminals, are you still going to wave the flag? Now, the flag might still mean something to you, and in my heart it does, but it actually means fighting away from tyranny and oppression and creating what was created here a couple hundred years ago, which has now been stolen. So the idea to say that I'm not a patriot because I'm telling people to get out of the dollar or helping people get out of the dollar, helping people save their finances from ruin, at least from what the cards seem to be, it doesn't mean I'm un-American. It just means that America is not what it used to be, and you can't see that because you're brainwashed, because you're not aware of the criminal element. Go vote for Hillary,
Go vote for Hillary. Yeah. Well, when people tell me I'm not patriotic, I say, well, no, I think the one who's not patriotic is you, because you allowed the Constitution to be abrogated with the Patriot Act, which, by the way, is 90% in common with the Nazi Gestapo manifesto from Nazi Germany.
Wow.
What? Did you miss that? Mm-hmm. I say. No, I am an advocate of gold and silver, and those who tell me that it's not proper to have gold and silver, those are the traitors. Right. So the traitors started with Richard Nixon going off the gold standard. That's your breach from the Constitution. That's your criminal act. Mm-hmm. And this is all consequence. Now, if you want to get really ugly, Will, let me have this closing note. You got the stars and stripes on the flag. Don't they really need to be swastikas, blood, and heroin?
Mm-hmm.
No. I bristle when people tell me you're not patriotic. I have family members who tell me I'm not patriotic. And I tell them, go to hell. Just go to hell. Leave me the hell alone.
Well, in looking at your Skype picture, your Skype thumbnail, is the great Ben Franklin. So
Yeah, Ben Franklin.
that's
Two of my biggest heroes of the founding fathers are Ben Franklin and Thomas Jefferson.
Yeah.
I mean, to be sure, Washington was great. He led them all, but who are the brains behind it?
Mm-hmm.
Who are the ones who really did the tough legwork?
Oh man, and
the legwork was Franklin.
Yeah.
He went and solicited France's alliance to fight against the British, and Jefferson. He wrote the Declaration of Independence. He warned about excessive power to the central banks.
Yep. Eternal vigilance.
Thomas Jefferson was the genius.
Yep. No, his quotes still today with eternal vigilance and peaceful, dangerous freedom versus peaceful slavery. I mean, they ring so true.
Oh, absolutely. And Will, I bring up the founding fathers when I have conversations with my own father. I say to him, do you think Franklin and Thomas Jefferson and Hancock and John Adams, the people that you hold in such high regard, do you think they would be happy with the Patriot Act? Do you think they would be happy with the airport restrictions? Do you think they'd be happy with the too big to fail banks that aren't liquidated? And all I get is silence. No, if you bring out the heavy artillery in such arguments, all you get from the family members and the people who are emotionally attacking you is silence and ignorance. So, I mean, my father just yesterday said, "Well, you've got a lot of followers, Jim, and I understand it. It makes you kind of feisty, like a junkyard dog." And it's like on the margin of our society. I said, yeah, it's on the margin of our society, Dad. They're the people who want to preserve their life savings. And they're called kooks for wanting to preserve their life savings.
Isn't that crazy?
And then I got the shock of shocks. This really surprised me. My sister, who's holding a rather sizable work-related 401k,
mm-hmm.
She's been given advice for the last few months by her financial advisor to convert and to invest some of her position for the pension fund, personally managed pension fund, in gold and silver.
Wow.
And I felt like joking with my father. Gosh, does that mean that her financial advisor reads the Hetrick letter? No, but I did have one pleasant experience related from my sister to me. She's an attorney in Pennsylvania. She said to me a couple of years ago, Jim, I had a rather surprising conversation with one of my clients. And the client said that he was a financial advisor, and he'd been working in the industry for 20 years, and he was going, through his own turmoil, blah, 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 that related to my sister and her work.
Tired of lying to people, basically? Sorry.
No, he was going through a divorce.
Okay.
Anyway, he said to my sister, I read a bunch of financial newsletters that are not mainstream. And she said to him, have you ever heard of Jim Willie? And he said, yeah, of course I have.
Oh, he's my
good.
favorite. He's the best.
No, I didn't say that, but he said he's good. And she said some other things, but I'm a modest, humble guy. And she said, oh, that's my brother. And he dropped his jaw and said, you're kidding. So my sister, through happenstance, encountered somebody who reads the work that we do over here. And I give a lot of credit. I always try to bring in, it's www.goldenjackass.com, but behind me are 6 or 8 extraordinarily smart guys and very well connected guys who hear things, who know what's going on in the mining industry, because one of them is a venture capitalist in the mining industry and oil industry. We've got an engineer with patent history, very, very successful. He knows what's going on. The Voice is a gold trader. I got George. I call him George of the Jungle, but George of the Comics. He's a former comics logistics manager. I've got London Paul, who's an expert in London Center finance and does a lot of consulting work for them. I mean, I get a lot of help. There's a guy who's a mortgage bond expert who provides me stuff. There's a founder of Implode Explode Mortgage. He helps me out, has stuff all the time. And then there's the venerable Rob Kirby, who's the bond expert extraordinaire, who taught me what I know, which, is not a lot, but he taught me as much as a monkey could learn about derivatives. I've got a layman's understanding and a little bit better of the derivatives, and thanks to Rob Kirby for that. He's a hedge expert, a derivative expert, a bond expert, who went out of favor in Toronto because he revealed how Wall Street was using Toronto banks as a skunk site to hide a lot of their derivative trades. Mm-hmm. So, this is really ugly stuff. Let me not leave out Euro Raj, who had a lot of experience working in London, and he's my hidden secret expert, not so well hidden, but my very valuable expert for Iran, India, Turkey, and he comes from that region. That's why I call him Euro Raj. But he's an experienced London banker. So I got 2 London bankers in my gang, and I gotta say, they don't miss much. Mm-hmm. And we chew things over, and they appreciate my contribution, even though I'm just a lowly statistical analyst. I've had to learn about economics, and I love saying this in my bio. I'm unencumbered by the limitations of economic credentials. Mm-hmm. And my brother is limited because he's got a good, solid bachelor's degree. He doesn't know jack shit about economics.
Jim, you hit the nail on the head with that. I mean, I went through an international business degree and was a financial advisor for several years. And it's funny, I was just having an email back and forth with a new client last night, and she is a little bit hung up because her financial advisor, who really cares for her, and that could be true, it could be a friend, and he's concerned about this IRA LLC rollover and wants to read up on it and blah blah blah. And in conversation with her, it came out that, look, financial advisors, economists, they are not only trained, regulated, they are born into this lie. Call it an illusion if you want to, if you don't want to believe that they're lying to you, because they actually, in their minds, may not be lying. It's a complete illusion that they are spoon-fed, that the industry feeds them and reinforces in them like some sort of a communist apparatus. It is so powerful. The level of brainwashing. I mean, I worked with really, really, really sharp guys that in financial advising, working for a great broker-dealer, working for one of the better national ones, and these were brilliant people it's almost as if what they were trained and what they were spoon-fed and what they were bred to believe was so powerful that it took away their ability to rationally think or to critical think or to question any of it, which is why I'm so terrified of putting my children through any type of school at all that's not like a classical education. That do not regurgitate, do not do what you're told, question everything.
No, you could privately teach them economics and make sure they don't take a single class past introductory microeconomics and introductory macroeconomics. I don't regard the financial community as brainwashed. I can consider them to be badly taught and suffer from extensive negative conditional training. They've got bad learning. I mean, if you're taught all the way from day one, gold doesn't really do anything for you. You don't spend it. You can't use it. Doesn't earn an interest rate. I mean, all you do is you look at it, and you shine it and show your kids your nice collection. And well, now the market is so messed up that a new phenomenon has taken place where the most recent minted coins, like say from year 2005, 6, 7, they're starting to trade like collector items.
Mm-hmm.
Okay, so you got all this bad learning, but I don't think you could have a financial advisor explain to me why a 2007 minted Silver Eagle silver or an ounce gold piece, why are they trading like a collector item? And it's demonstrated proof of a broken market.
Yeah.
And when you get the broken market, and when you get the new dollar, and when you get its devaluations, you're going to see the comics shut down.
Yeah.
They're going to be lawsuits, international lawsuits, not U.S. lawsuits. International law is closing in on Wall Street and Washington.
I think you're right.
We're in dangerous times, Will, and people better get their gold lined up and their silver lined up. I still say gold fights the political battles, but silver's going to win the big spoils.
Right.
Gold is going to double and triple in value, but silver will rise 3- and 5-fold. Mm-hmm. The Voice thinks that the gold to silver ratio is going to come down to 25 to 30.
Yeah.
And you're going to get a giant rise in the gold price. So he's expecting a monster rise in the silver price.
Well, at this point, friends, don't wait. Don't wait. Get your hands on the physical stuff and get it now, because silver, as we discussed, is already getting problematic, and I don't think it's going to change. I don't think you're going to see what we've seen. Anyway, not to go back into that, but I think that's it on the silver side. Get it while you can. Check out Jim's incredible work and his team that he mentioned that goes much deeper than the names he even mentioned. The folks that contribute to what he contributes on the Hat Trick letter every month. Again, that's found at thegoldenjackass.com. We'll, of course, have links. Anything else you want to add, my good friend?
No, it's not just my colleagues I like to thank and have a lot of gratitude for. I've got 5 or 6 or 8 what I call news hounds. Mm-hmm. It's Matt, Don, Jill, George, Nesto. They just send me stuff. Some of them send stuff every day. Others send really juicy things like once a week. It just makes my inbox rich. Yeah. It's a farmed out research function. So this is not just a PhD stat rat spouting off stuff. This is a switchboard. This is a grand central station of alternative and valuable information and opinions that I put into it. For a while there was one monthly report, but now when the climax comes, I let the volume dictate whether there's 1 or 2 reports.
Right.
Sometimes I think, well, this will be kind of a light month. There's not a whole lot happening. Well, gosh, you have the devaluation of the RMB, Tianjin, damage fallout from the energy sector, and a lot of other things. It's 2 reports now, and I don't mind that. I just need to get my solid rest, and I do. I'm pretty much an expert in rest and relaxation. I don't meditate. What I do is I just lie down with an old math or statistics textbook, and I read about the derivation of exponential or logarithm, and then I just take a nap. No, I'm a weird guy. I look at my old math and statistics textbooks, and I have some favorite problems that I bring on, and I just keep a little file in a folder, both printed and electronic. I send them out like a proof of the Pythagorean theorem. Hypotenuse C squared equals A squared plus B squared. If someone wants that, send me a contact us message, and I'll send them the proof. It's simple. It's like 5 lines. But longer and more difficult. This was fun. This is fun for me. I'm a strange guy. I love my math. But the law of cosines. Well, what if the angle's not 90 degrees? It's not C squared equals A squared plus B squared anymore. You have to subtract 2AB cosine of the angle. And if it's 90 degrees, the cosine sign goes away because it's zero, and you got the Pythagorean theorem. I mean, I've got a proof of that. So these are the things I do in my spare time to get away from finance economics. It's going back to mommy's breast. Mother Nature, math, statistics.
Yep. Well,
okay. All right. Well, hey, look, it's a pleasure being on, and sorry about my lost voice. I was yelling a couple of days ago, and I guess I'm not entirely better.
well, get some rest. I know you've got a busy week for your voice here coming up, so rest it out, my friend. It's always a pleasure, and look forward to seeing how things unfold, and we'll do this again, I'm sure. And we were doing them every few months, but with the way things are starting to come together here, we may have a Jim Willie once a month moving forward. I don't know. Let's just see what happens. But love having you.
Well, it's a pleasure being on, and I hope to be on again. And next time I'm on, expect much more damage to be evident.
Yep. That's one thing we
can
promise.
much closer to the big day where they launched the new dollar. Mm-hmm. I call it the Scheiss dollar. And thank you all those German clients and German followers who helped me to